All right, guys. So this is the trade that I took today. This crazy trade. Hold on, let me show you guys. You probably can't really see. I know this trade. I know you might be like, "What the fuck? You missed out on all of this." Yes, I did, but that doesn't have to be you. You can be the person who holds on to this whole thing. I got out because I don't usually hold too long, but these trades are being caught every single day by people who know how to trade the strategy that I'm about to show you guys. And it's a very simple strategy. And I want you guys to really try to understand what this strategy is because it's very, 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 very simple. Okay. And once you understand the strategy, bro, you're locked in. And these type of trades are appearing more frequently or more often than you think. Like, I'm not even lying to you. I thought that these trades weren't there or weren't really appearing ever. You have to get lucky. But this week and even last week alone, bro, I've seen these trades, so many of these trades. This one right here, candlestick demand zone taps in right at open and then just skyrockets. Okay. Now it all goes down to the same thing at the end of the day. And it's what I've been telling you guys from the jump. And it is first understanding structure. Okay, once you understand structure, then everything else makes sense. Okay, that's just the number one. That's just like literally number one. And I want you guys to really understand this because structure is so important when it comes to trading these type of setups and catching these type of trades, because if you don't understand structure, what's going to happen is you're going to find a demand zone or a supply zone, and you're going to think, oh, just because there's a supply zone here, I'm going to take it. No, it doesn't work like that, because that supply zone or that demand zone can work, but if it doesn't align with what where structure is going, then you might just get burned, or that trade might uh, that price might reject off of that zone, but it's not going to give you a good return. It's going to be a little small return, which is good if that's what you're aiming for. But let me show you today's trade so you can really understand how it looked like today for me and why I took it. So number one, if we look at this right here from here to here, just and this was yesterday's trade I took. But if you look at this from here to here, you can see, what are we? We're bullish, right? Of course, we are bullish. Or yeah, hold up. Let me see. Okay, so right here we are obviously bullish. We have this high, this low. We have that high, that low, that high. Okay, so now you know what we're bullish. What did we do right there? We changed from bullish to bearish because this candlestick broke that last low. So this right now is bearish. Okay, so now the structure on the 1 hour is bearish. Not even that, but also there's a supply zone that's created. So we have a valid supply zone, and then we also have structure is bearish now. Okay, but it's a little bit tricky because this really could just be a fake out, but that's why we'd have to wait for a rejection and see what price is doing on the lower time frames. So if you look at this on the lower time frames, what are we? We're bullish a little bit on the we're still bearish, but structure in here is bullish. Okay, so on the 5 minute we'd be bullish. So on the 5 minute, as you can obviously tell, we are bullish, right? From here to here, we are bullish. But since we are bearish on the we are in a supply zone, and we are bearish on a 15 and a 5 and a 1 hour, that led me to believe, okay, probably this could reject, but I'd have to wait for a certain type of sign or signal letting me know, an indication letting me know that this wants to drop. So in this case, I was just looking at this and I was waiting, and I was seeing how this was reacting. So I saw that we came up right here at 9:31. So we were bullish I mean, yeah, on the 5 minute and on the 1 minute we were bullish, but then once this candlestick started to kick in, that's when it kind of gave me the indication of, okay, this could start dropping. This really could start dropping. So once these two candlesticks closed, that's when I entered this trade, because we were leaving this area. So what I said, I was like, okay, let me get in this trade, let me enter this trade right here, because on the 5 minute and on the 15 minute, it was we were it was very bearish, right? It was very bearish right here. And not even that, this close was very bearish close. This right here was a very bearish close. That's why I always tell you guys that you need to use different entry models. And for this entry model, what I use is I use a candle close entry model. And the reason why I took that candle close entry model was because I waited for the candlestick to close to see how it was going to react when it tapped into that zone. And as you can see from here, it reacted pretty good. Like, this is a clear sign that it wanted to drop, right? So I understood structure was bearish on the 15 and on the 5 minute, I mean on the 1 hour and on the 5 minute. Right here you could say, okay, yeah, we are bearish, we are bullish, because on the 5 minute you could say, oh yeah, we're still trending up, and which we were still trending up. But in this case, the way we're reacting in here is not a good sign. So what I did, like I said, is I took that entry based off of how the candlestick was reacting off of this area. Now, it could have been a fake out where it could have just faked me out and it could have just continued to go higher. But for me, I just thought it was weird how once price came into this area, it starts reacting differently, right? Once price comes into this area, it starts reacting differently. So that was my thought process. And also, like I said, structure was bearish on the 15 and on the 1 hour. So if it's bearish on the 15 and on the 1 hour, what do you think that tells me? That tells me that I need to look for a supply zone. And once I see that supply zone, then that's when I take it. So that's exactly why I took this trade. It's all about how the candlesticks react when they tap into those really prime areas, like those demand zones or those supply zones. If you wait and really analyze, or not analyze, but you see how the candlesticks react in these certain areas, and if you have structure to back it up, it's a clear sign that it's going to reject. Just from my own experience, it's a clear sign it's going to reject. So in this case, that's exactly what happened. Okay, and then obviously I took this trade, and it did drop. I didn't catch the whole thing, which would have been beautiful, but I didn't catch the whole thing. But look at this, really nice, really nice. And I mean, like I said, we switched, we shift in structure, we had a shift, and then what happened? We just continue to go down, we continue to drop, we continue to drop. So that shift happened, even right here on the 15. That shift happened, right? We had this high, we had this low, we had that high, we break, and then what do? We start like kind of just we kind of just start shooting up, coming up, coming back up, coming back up. But you see, once we tapped in once, it dropped. Once we tapped in twice, it dropped a little bit. Now it was just like it was already it like this is what was coming. This was bound to happen. Like, the markets were bound to drop because it tapped in once when the markets were closed. It tapped in twice when the markets were closed, and right when the market opened, oh man, like there was no other option. And the thing is, I don't want people to just see any demand zone. I don't want you guys just, oh, here's a supply zone, here's a demand zone, and it's going aligning with structure. I don't want you to just enter right off the rip. You can take that entry model, because that's an entry model that I use as well. At times, it's called a risk entry. But what I want you to really understand is I want you guys to understand that you have to be patient and you have to wait. You have to wait for the candlestick to give you some sort of reaction. Okay. And what I do is I go on the 1 minute to get that. So if we go right here on the 1 minute, you can clearly see, hold up, you can clearly see this wants to start dropping. Like, this wants to start dropping. I mean, it really does. Look at this candlestick. It's a very bearish sign. Very bearish candlestick. This is giving me the indication that we want to drop. We want to drop. Look at this. Boom. Once we drop, and then not even that. The next candlestick, what is bearish as well, is bearish, right? So two bearish candlesticks after that long bearish candlestick inside of a supply zone in a bearish market, in a shifting market, because that's what I was predicting, it was going to be shifting. That tells me all I need to know. That really tells me all I need to know. So that's why I would take it. I wouldn't just take this like right here. Um, Let me actually go back in time so you guys can see something that I would not do. And a bad example of this. A bad example of this was, I wouldn't enter right here either, because there's only one bearish candlestick. This closed bearish, and it didn't close that bearish, and this is not something that I like. So I wouldn't even have entered right here. I would have to wait for a real good bearish candle close or a real good reaction candlestick. So then once this one right here, I would never take this entry. Like, I'm gonna be real with you guys. I would never take a trade like this, even if it's all the way up here. I know if I would have got in right there, that would have been a sniper entry, but I'm not taking this because first of all, there is no sign of slowing down. There is literally no sign of slowing down. No sign at all. Okay. Right here, after this close, this really could be a good trade to take right here. I'm not gonna lie to you, but for me personally, I would wait for one more candlestick to close because what always happens, or not always happens, but what I've seen happen a lot is we do something like this, we close like this, and the next candlestick would be something like that. Boom. Right? Or it would be a very bullish candlestick like this. It would close something like this, and that's not what I like. So I would either A, wait for it to close, or B, wait and see how it starts reacting. If it starts reacting very good, like it doesn't want to, it's slowing down and it doesn't want to shoot up anymore and it wants to just start dropping, then that's when I would take the entry. But as you can see, what I did was I just waited for this next one to close, and then I just got in right after this one closed. Now I did get in a little late, um, but that's mainly because I was also trying to see how this candlestick, if we were gonna close, if we were gonna break this last low right here, this is the last low. So I wanted to see if we were gonna break this last low just to get in, and then once it did, that's when I got in, and then from there everything was just straight profits. So that is an example of that. And let me show you guys a trade yesterday, and I didn't take this trade. I took another trade yesterday, and I think it was on SPY if I'm not mistaken. But I took this trade. No, I saw this trade on AMD really late, like right after, like probably an hour after. And honestly, I'm not gonna lie to y'all guys, I was like a little disappointed, if I'm being real. See, look right here. This is what I was expecting. I was thinking, oh, we're gonna drop, but I was expecting a drop to come from here. And now I think the drop came from this 1 hour, but as you can see, it's not that clear as the one on SPY. So similar to SPY, but not that similar. Right here, boom. Check this out right here. So as you can see, what do you see right here? Right? What do you see right here? Markets are bullish. Okay, that's number one. Markets are bullish. As you can see, we high, low, right? And obviously, like we're like very bullish, but there's no need to really look at all this other stuff. This is just, that's just doesn't really matter. But we are very bullish, right? We are very bullish. So at this in this case, we are bullish as hell, right? So that's number one. I know that structure is bullish on the 1 hour, and you always want to look at what structure is doing in that. Okay, so I'm gonna give you an example because I was gonna fuck it up, but let's say that structure is bullish on the 1 hour, but you don't see no zone on the 1 hour. Would you take it? I would sometimes, but you really want to know because that's what structure's aligning with that. So structure is aligning. No, the zone is aligning with that structure. You get it? So you always want the zones and the time. That's a whole other video. Okay, but yeah. So like I was saying, my bad. So we have a demand zone. So we know structure is bullish on the 1 hour, and then also we know that there's a valid demand zone right here. Candlestick impulse move up. So what does that tell me? That this has a possibility of shooting up and reacting off of this zone. But like I said, it's not all about just entering because you see a zone. If I'm being real, you have to wait and see how that zone reacts off of that area. So in this case, we see the zone, we see the setup, everything is clean. On the 5 minute, we're obviously bearish. So that's number one. On the 15 minute, if we just look from here to here, we're bullish, right? Because we were bearish right here, low, high, low. Oh wait, low, high. Then we never broke this last low, and then we broke that last high, causing a shift in structure. So 15, we're bullish. 5 minute, we're bearish, and that's cool. It's cool to be bearish in on the 5 minute and bullish on the 15 minute. But we have a clear zone right here. So if this starts dropping, this starts dropping, this starts dropping, what am I looking at? What am I looking at? I'm looking for how it's going to react off of this area. And as you can see, this gave a perfect reaction. Bro, has to be the most perfect reaction that I've ever seen. Bro, look at this. Drop, Like it doesn't get better than that. And honestly, I feel like the best trade to take would have been something like right here. That would have been a very good trade to take. Take that, and then target could be right there. This is a very good trade, and it comes down to the same three things that I told you guys in all my videos. Now I'm switching them up a little bit, not the three things, but I'm switching up like the time frames and also like all the other stuff, like holding on to the trades longer and price targets and all that. But the three principles stay the same: market structure, supply and demand, and entry. It's the three things that really move the needle when it comes to trading. Master these three things, and you will become like, I'm not gonna say you're gonna become profitable. I don't want to guarantee that, because you know what I'm saying. But you, especially if your mindset is right, you could really become consistent. You could really become consistent in this game of trading, because this is what the markets is all about: structure, supply and demand, and entry. That's literally all it's about. Once price taps into your zone, look for the entry. Wait for the entry, and once you see an entry, and I got videos on entry models, you can go watch them. But once you get a good entry, boom, it's over. Like it's over. Like I'm telling you, it's over. You get that entry, boom. You master entry, it's over. You master any of them, because if you understand structure, you know where structure is going. Boom. You master supply and demand. Boom. You master entry. Boom. Like it's all about mastering these three things, and this is way better than trying to master everything else at the same time. Like this is so much better. So that's all I would say. And it was a pretty long video, but if you did enjoy it, like it, comment. You know what? Just like it. Don't even subscribe. Fuck that. Don't subscribe if you don't want to. Fuck that. Just like it and let me know what you think. But other than that, that is it.